But let's talk about Cosmo Films, the unlocking potential that they see from the pet care business, tailwinds for the packaging sector, and of course, what's their growth guidance and outlook going forward. Joining me right now, Pankaj Poddar, the Group CEO at Cosmo Films, on the show. Pankaj, hi, good morning. Good to have you on the show and wish you and your team a very happy and healthy new year.
A very happy new year to all the viewers and to the ET Now team.
Thank you so much. Pankaj, one has seen strong consumption trends which have clearly been witnessed in flexi packaging space, especially post-COVID. Now, your company has given a revenue guidance of almost about 4,500 crore rupees in FY25. What keeps this optimism and what makes you think that you're going to achieve those numbers soon?
See, Cosmo Films is a player who is largely focused on specialty films. On multiple areas, we are the global leaders. On thermal lamination, we are the largest in the world. On industrial applications, we are the largest in the world. On specialty labels, again, we are in top 3. So Cosmo has been consistently growing when it comes to different specialty segments. We are a brand name to reckon with the brands itself, with the FMCG brands, with the label customers, so on and so forth. And customers are really looking at any new expansion coming from Cosmo Films. Accordingly, we have already announced 2 new lines. One BOPET specialty line, which is going to come up in the next financial year. And then the next line, which is going to come up in FY24-25, which is the world's largest BOPP line. So both these two put together is going to add 1,500 crores to our current year bottom line of 3,000 crores.
I understand, Pankaj, that you've given an outlook that you're going to increase your exposure to specialty film business from the current 60% to almost 80% in FY23. Could this really run a risk of possible concentration with a particular client or a particular kind of business?
Actually, absolutely opposite of that. We are very well diversified. Cosmo Films is present into 4 different segments. Actually 5, which is packaging, labels, lamination, industrial films, and synthetic paper. And I would say that, in fact, if we see majority of the other film players, their 70-80% focus is just on packaging. While for Cosmo, packaging has been going down over the years. We are at 40% now, and labels, lamination, synthetic paper, industrial applications, all niche applications are growing very nicely for us. This also means that our number of customer list is going up. We today serve close to 350 customers in different segments in different parts of the world. And the other thing is that close to our 50% in volume terms and 60% in value terms are going to different parts of the world. We are pretty much everywhere in Europe, in South America, in North America, Japan, Korea. So we virtually sell in every part of the world. Given that we are a specialty player, niche applications, technical applications, and therefore there's normally a longer approval process. It takes anywhere between 6 to 12 months to get any new approval from the customer, and then the scale up happens. And to that extent, our risk exposure is significantly lesser. In fact, the whole objective of moving into more and more specialization is to decommoditize the company. Make it a more specialty company, have more stable margins, where the raw materials are linked, the sales price are linked to the raw material pricing, and therefore a much more stable margin for our investors.
Pankaj, okay, that's interesting to hear. Just talking about the increase in capacity that you are planning over the next several years, culminating, as I understand, in FY25, where you're going to have an approximate 33% increase in capacity. What would be the right way to understand how this will work? Can you help us understand how the revenue is going to change? You say that you're going to move towards specialty, and therefore is market share in these various segments that you're going to operate in the right metric to look at?
Yes, so the specialty, we are actually getting into the BOPET line or the polyester line for the first time. But again, our focus will be largely on the specialty segments. We are going into coatings, we are getting into heat control films, we are getting into shrink labels. And let's talk about shrink labels as an example. Today, the Indian market is largely dominated by PVC labels, and we see a much better environmental friendly solution for the brands where they can shift to shrink labels, a technology provided by Cosmo. Similarly, heat control films is largely imported from many parts of the world, and export itself is a very large market. It's a niche area where we'll make right from resin to the film, to the coating, to the metallization, to the coloring. Everything will be done in-house in the company. So we are very focused on the niche segments, on the technical segments, and we are going to grow in these different segments. Obviously, when we put up a new line, for first few months, few quarters, we'll have to obviously start with commodity sales, and all our lines are capable to do both specialty and commodity. But as we start to scale up, we will be shifting these volumes away from commodity films to specialty films. And from a revenue perspective, again, to answer your question, this year when the line comes up, there is almost close to 15% capacity expansion with the polyester line. And when we are coming up with the BOPP line, that itself will add close to 30%. So between these two lines, we're adding 45% capacity to our existing capacity. And accordingly, we do expect around 50% sales growth over the next 4-5 years that we're talking about.
Okay. Help me understand where we currently stand, what the capacity utilization levels are. And I'm also trying to understand the durability of the demand in the spaces that you're playing in right now. Do you foresee any disruptions whatsoever, or do you think that it's going to be more or less smooth sailing from this point?
So see, when it comes to the base film capacity, we are fully occupied. We are always having an order book of, let's say, 15 to 20 days. The customers have signed contracts for a very large part of our volumes for the full year. So that is never a challenge for us. For us, the ideal capacities from a perspective that how much volumes can we shift from commodity volumes to specialty volumes. And from that perspective, 40% of volumes are still going into commodity. And that is the prime area for us to work upon, where we quarter on quarter shift these volumes into specialty. And we had actually one of the best months in December again, where we were able to do very well on the specialty growth. And that in the film business is one of the most critical areas that we evaluate, that how quickly are we ramping up our specialty sales. So this year, we are growing at close to 25% plus rate versus the last year, and that rate is again growing every year. So when the first year when we started this exercise in 16-17, we had 8% growth versus last year. And then since then, every year, this growth rate itself has been going up. While what we were thinking is as the base itself will get larger, maybe the growth rates will actually slow down. But what is happening in our case is because the pipeline is so strong, the new products development is so strong that every year the growth rate itself is getting stronger and stronger for Cosmo.
You've been, Pankaj, a dividend giving company in that you've had a dividend yield of more than 20% over the last 5 years, and you've also completed share buybacks. Just trying to understand, with the aggression that you're showing in these new business lines and your objectives over the next 5 years, will you continue to have the same policy? What is your dividend distribution policy going to be like?
So we always believe in paying fairly to our shareholders. Our chairman, our board is very clear that the shareholders have to be paid on a regular basis. And obviously there's a clear dividend policy stating that we have to be fair to our shareholders. We have been maintaining it at 20% of our PAT, and I see no reason that we will change too much from those levels even in the years to come by. Again, as far as the buyback is concerned, that decision again lies whether we have enough projects in hand to deploy the cash that we are generating from the business. And if any particular year, if the board feels that we do not have enough projects in hand to deploy that cash flow, then in that case, obviously they take a decision. So we have done just one buyback in the past. Having said that, we will, I mean, the board will continuously monitor if at all, what is the cash flow being generated and what are we going to do about it.
Sure. Pankaj, good having you in the show. Thank you so much for taking the time out.